Heya Cryptozens. Tonight's show. Yellen for stablecoin regulation. Nigeria to upgrade CBDC ignores crypto. Saylor confident in Bitcoin and MicroStrategy. It's 10 p.m. Pacific time. The date is May the 10th, 2022. Welcome back to the Crypto Overnighter. I'm your host, Nick. The cover model for this podcast is Tex, and together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. Now take a minute, go ahead and subscribe to the podcast now, because we're here at 10 p.m. every single night to bring you the crypto news analysis that you need to start your day. And keep in mind, nothing in this show should ever be considered financial advice. Highly appropriate, Yellen said. U.S. Treasury Secretary Janet Yellen said it would be highly appropriate to aim for a, quote, consistent federal framework. She also said, quote, a stablecoin known as Terra USD experienced a run and declined in value. I think this simply illustrates that this is a rapidly growing product and there are rapidly growing risks. That's a bit of an understatement. And based on the growth of the stablecoin market, she says we need this consistent federal framework by the end of 2022. All right, so here's what's up. You know what's going on with Luna and Terra USD and Bitcoin and that whole mess, right? Symbiotic relationship between Luna and Terra USD or UST only works as long as there's more value in Luna than there is in UST. Well, whether for market reasons, run-of-the-mill market volatility, plain old sabotage, whatever the reason, UST got out of balance from Luna. More UST was issued than they had Luna to back it. Well, that's led to, among other things, Terra USD got depegged. The third largest stablecoin by market cap was down to 67 cents per. Luna, they lost 41% in the last 24 hours. Bitcoin dipped below 30K, and there were rumblings that this mess with Luna has drugged down the price of Bitcoin. So that's the situation, and in the middle of it, United States Secretary Janet Yellen said U.S. lawmakers need to come up with a, quote, consistent federal framework. She also said that they've got to get a handle on regulating stablecoins in order to address the risks around financial instability, and she said that it needs to happen by the end of this year. You see, she was in a hearing of the Senate Banking Committee on the Financial Stability Oversight Council annual report to Congress, and she cited a November report from the President's Working Group on Financial Markets. Specifically, she restated her previous position calling for a framework on stablecoins. She said, quote, I think the situation with Terra USD simply illustrates that this is a rapidly growing product and that there are risks to financial stability, and we need a framework that's appropriate. So later, Pennsylvania Senator Pat Toomey, he pointed out that UST is an algorithmic stablecoin and as such is not backed by cash or securities. And so she said, based on the growth of the stablecoin market, it becomes, quote, highly appropriate to aim for a consistent federal framework on stablecoins by the end of 2022. And she's calling for bipartisan cooperation between the two parties to get that framework put in place. So in her written material for this hearing, Yellen said the Financial Stability Oversight Council was working on a report. And this report is meant to comply with President Biden's executive order on digital assets. It's supposed to identify potential risks to our financial stability, as well as call out any regulatory oversight gaps. President Biden's order specifically called on several government agencies, and they're supposed to coordinate and cooperate on policy as a part of the plan to get a national framework on crypto in place. So Yellen, she's been in the Biden administration since January of 2021, so going on a year and a half, and she has called out crypto before. She said crypto represents a, quote, particular concern for the Treasury Department. And when she does that, what she's really doing is she's subtly associating crypto token projects with illicit financing and money laundering. In fact, in a lot of her public recent statements on policy concerning crypto seems to be focused on stablecoins for the market. And frankly, I hope she is successful in her goal of establishing a more appropriate regulatory framework. We have to have some guidance. We have to have stability. And we have to have some guidelines from our government. Frankly, I lay the blame for a lot of the volatility in the crypto market on a lack of regulations. People are at their most fearful, their most panicky, when they don't know what to expect. And that's when they make mistakes. So it seems appropriate to help them out. All right, let's take a look at the markets. Things are still down from yesterday, but stable-ish, except for Luna, of course. She's still dropping. At the time of writing, the global crypto market cap is $1.41 trillion. That's down from the $1.42 trillion of yesterday. It's down 0.06% in 24. The top 5 cryptos by market cap are Bitcoin down 0.46%, Ethereum up 1.48%, Tether, Binance Coin up 3.08%, and USDC. Nigeria is the largest economy and the most populous country on the continent of Africa. In October of last year, they launched their own central bank digital currency, or CBDC. It's called the e-Naira. So the Central Bank of Nigeria, CBN, they're planning on upgrading their CBDC. They want to expand its usage for a broader range of goods and services. At the same time, they're going to keep their crushing crypto regulations in place that are just choking the life out of that country's financial sector. Of course, none of this is a surprise. The Central Bank of Nigeria is a central bank. They want to keep their CBDCs to keep Nigerians from using cryptocurrency. So the central bank, they put out that announcement. And in that announcement, they said that bill payments would be in an upgraded version of the e-Naira app. Which, really? They can't do that now? People can't just use the app to pay their bills whenever they want? That sounds suboptimal. Anyway, they also said, quote, "This is part of measures to increase the use of digital currency, including sensitization campaigns in major markets across the country." Which makes sense from their standpoint of view. They're trying to head off cryptocurrency by making something that they're going to claim is just as good or better, which is clearly not true, but whatever. On Monday, they had one of their branch controllers at an event in Lagos, and it's a campaign to get more businesses using the e-Naira. And that's what they want. The government of Nigeria is so scared of cryptocurrency, they made it illegal to trade in crypto back in February of last year. They created the e-Naira to keep their people away from crypto. Let's see how the NFTs are doing. The global NFT market cap is up over $10.59 billion. Sales volume is down 0.18% in 24. According to CoinMarketCap, the top 5 NFT collections by sales volume are Azuki, followed by Other Deed, Beans, Bored Apes, and Mutant Apes. Now, keep in mind, some of these collections have very volatile prices, so do your own research. He's not going to do it. Saylor is not going to sell. If you pay attention, Michael Saylor makes it clear he's not selling and he doesn't have to. So, founder and CEO of MicroStrategy, Michael Saylor. Now, MicroStrategy, they made headlines last year. They went with a novel approach of a corporation buying Bitcoin, adding it to their books to act as a hedge against inflation as well as an investment. And Saylor was the driving force behind adopting that thesis. Now, they started out with a $250 million initial investment. That's $250 million that was free and clear from any obligations to their shareholders. And they used that to buy 21,454 Bitcoin to put in their treasury. Global markets have been getting hit hard the last several months, and MicroStrategy really isn't doing any better than anybody else. And then with the value of Bitcoin dropping alongside the value of the stock, the rumor mill started up. So Saylor spent some time on Twitter Tuesday morning, And his point was he was there to assuage fears and concerns people might be having over MicroStrategy's financial health, given the drop in Bitcoin's value, and given that MicroStrategy isn't doing much better. Their stock has declined almost 73% in the last 6 months. And what folks are really interested in is how this is all going to play out with those Bitcoin-backed loans. Because they took a big loan from Silvergate Bank, $205 million worth of loan. And they backed that loan with Bitcoin. And so it sounds like it's the typical thing. You want to take a loan out, you have to provide double the value of the loan in collateral as crypto. And they hold on to that. If you lose that value point, you get liquidated. Fairly simple, familiar stuff. Same terms as if you and I wanted to go and borrow money on our crypto. So that's the terms that MicroStrategy took with their loan. And so it is that in his Q1 investor presentation, he laid out the numbers. Now, they have over 129,000 Bitcoin. Of that, slightly more than 115,000 of that Bitcoin is unencumbered. Nobody has a claim on it. So why is that important? That 115,000 Bitcoin, they act as a cushion. And that means the price of Bitcoin could drop down to $3,562, which is quite a ways, before they get in trouble, before they run out of Bitcoin that they could use as collateral for that loan. And even then, it's not all over for them. They have other resources. Saylor said at that point that they could just post some of their other collateral. Now, what he's saying without saying is that there's pretty much no price so low that he would be forced to sell his Bitcoin. Not unless he lost absolutely everything. And this is specifically relevant now because Bitcoin dropped below $30,000 for the first time since July of last year. And people are blaming that on the Luna Foundation guard dumping a bunch of Bitcoin on the market. But that's just speculation as far as I'm concerned. That said, there have been rumors of MicroStrategy facing a margin call. So a margin call is when a broker isn't sure that you have enough to cover your responsibilities. So they demand that you put in additional money or securities, something to bring your account balance up to that maintenance value. Now that happens after someone's had a bad run and their margin account is running low. At that point, brokers can choose to force traders to sell assets because how up or down they are in price. Just as long as they meet that margin call. Because if you don't, then you lose the whole thing. In fact, it's been suggested. Outgoing CFO Fong Li brought up the idea. He offered up the 21,000 mark as a trigger point for a price of Bitcoin to be the trigger point for that margin call. And so it would appear MicroStrategy is safe for now. Safe-ish. Because they're still potentially facing a margin call. They do have a ton of Bitcoin that they can bring up to use as collateral. But as more and more Bitcoin gets tied up into this, the more precarious their position comes because they have that much less capital to defend themselves with. Well, that's all we've got for tonight. Thank you so much for joining us. I really appreciate it. If you enjoyed tonight's show, like, comment, subscribe. Give us a review. Do you have questions or comments? Reach out and let us know. The email address is nick@cryptoovernighter.com. That's nick@cryptoovernighter.com. And check out my other podcast, Crypto in 5 Minutes. We have 41 educational podcasts, 5 minutes to explain one concept in crypto. And as always, may peace reign.